Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about EURUSD because at the moment we do have quite interesting price action and structure. So first I will be covering the technical side, then we will check also what we have from an order flow perspective. But starting here on the technical side of the market, on the monthly time frame, what we can see is that the market has just created a very strong correction, retracing all the way back to the previous monthly support turned resistance. In fact, during all this impulse to the downside, the market created one candle which is not related to the move, which is exactly this green candle here. In fact, this zone was actually tested up by the market in a situation in which we were seeing very strong bearish momentum. And even though we had this very strong bearish momentum, anyway, the market reacted to the zone and created this green candle, indicating that at this level, we definitely have very strong support and demand. However, after that, the market rejected this area and broke it to the downside. And as you know, in the market, previous support, once it gets broken to the downside, it becomes resistance. So what we're actually testing here is this very strong previous monthly support turned resistance. And what we could expect is a reaction to the zone in the form of a short-term move to the downside. So what we expect here, at least by looking at the monthly, is some short-term bearish price action. Dropping down on the weekly, what we can see is that from a weekly perspective, this move to the upside came with a textbook reversal pattern. In fact, we had the move to the downside, correction, lower low, the market then created another correction, failed to continue lower, created a double bottom, move to the upside, break above structure, retest, and continuation. So essentially what we had is the creation of an inverted head and shoulders in which the head was actually a double bottom. Now, this is a very common pattern in the market and actually very effective pattern in the market, which essentially goes like this. You have an impulse, correction, lower low, so up to this point you have a textbook downtrend. Then the market creates another correction, tries to create a new lower low, fails, and prints a double bottom. After this double bottom, effectively you have a W formation. And as I said many times, after the creation of a W, you expect a completion at the neckline and then continuation higher. And in fact, if the market does that, you have the creation of this inverted head and shoulders in which the head is a double bottom, which is exactly what you had here. Left shoulder, head, and right shoulder, in which the head is a double bottom. Now, here on the weekly, what we can also notice is that at this point, you are pretty much overextended to the upside and in need of a correction before then seeing more potential bullish continuation. So also here on the weekly, a bit overextended to the upside and in need of a correction. Dropping down on the daily. Here on the daily time frame, first of all, I spoke about EURUSD a few days ago after the market had created this impulse. I made a full breakdown explaining all the reasons for which we could expect from here a correction lower and then continuation to the upside. And in fact, that is exactly what the market gave us. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. However, now that the market has created this move, where we could be looking for the next potential movement in the market. Now, in this specific moment with this structure, we really don't have anything interesting. We know that on the monthly and weekly, we are a bit overextended and we need a move lower. However, on the daily time frame, everything is still suggesting more bullish continuation. However, if the market does create from here a move to the downside, at that point we would have a very interesting price action because we would have also here on the daily the creation of an M pattern. And after the creation of an M pattern, what we expect is the completion at the neckline. And there is the possibility for the creation of this M pattern because we know that on the monthly and weekly, the market seems a bit overextended and in need of a correction lower. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the euro, we can see how with the last reports, net positions have been increasing. We went from having a negative net positioning of minus 47.6k net positions with way more shorts than longs. In fact, we had 249k shorts compared to only 202k longs from an institutional perspective, all the way up to now having 105.7k net positions, with 13k longs added with the last report and 17.8k shorts getting closed, reaching 239k longs compared to only 133k shorts from an institutional perspective. So completely the opposite situation, in which we have way more longs than shorts. Now, in a situation like this, if the market does create this M pattern, we have no confirmation that the market will create it. But if the market actually prints this M pattern, at that point, since the market is so bullish, also from an institutional perspective, we could easily see the completion of this M pattern. There is a good probability that we will see the move to the upside and completion of this M pattern. So if the market creates it, how we could be approaching the potential move to the upside and completion of the M pattern at the neckline. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for this potential move higher and completion of the M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge discount on the lifetime access price of the mentorship program. So just one-time payment for lifetime access. And if you scroll lower, you will see that at the moment there is still time to join before the timer goes to 0 and the offer ends and the price goes back to normal. However, spots are limited, so if they get filled before the timer goes to 0, the offer will end anyway and the price will go back to normal. So I really suggest that you take advantage and join directly from here and gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I'll see you in my next video.